One other issue, which is a hot issue as far as investments are concerned, is the taxation of sale of properties. As far, well, my general understanding of property investments, correct me if I'm wrong, but this is the way I look at it. We buy properties for only three reasons. You stay, for rent, or you sell. Or in most cases, you flip. All right. So now the thing is like I'm going to focus on this issue, which properties for sale. Um, a lot of us happily this sells all our property and we file in CKHT and that's the end of the story. I'm sorry. There is more implications to that, especially so with the intensity of tax audits. Um, this portion here, where it's subject to CKHT, there is a quite a high likelihood the IRB is going to focus on income tax instead. Let me just explain to you why. A lot of us are unaware, but as far as the tax laws are concerned, actually there are two tax laws which is governing the sale of properties. For the common person, we will think that it's RPGT and that's the end of the story. But there's another act in question, which is the Income Tax Act. In practice, as far as the Inland Revenue Board is concerned, what they will do is this: they will treat properties to see whether they're subject to income tax. Take for example, property developers. They're selling properties. Well, they are under income tax. Why is that so? And why not RPGT, right? Because it's part of their trade. So as far as the property investors are concerned, you would think that it's a CKH. You would think that it's CKHT, all right? But for the flippers, it's a bit more tricky issue. Let me just illustrate by way of example here. Let's use the case of a car dealer. I'm using one of my friends here as an example. I hope that he's not listening into this story. He buys an old car, he refurbishes it, and then because it's something that he likes to do, he refurbishes his car, and then after that he drives it around during weekends, for the purpose of attracting girls. Then the car was a pretty he did a pretty good job of the car. So what happened was another one of his friends wanted to buy it of him. So since he has the expertise of doing all this reconditioning and refurbishing the cars, so he sold it, made a profit. Asked me whether this profit is taxable. I said no, it's not. It's not taxable because this profit is a capital gain. It's something you realize out from something that you use for your personal enjoyment. Fine. Then after that, you realize that, hey bro, since I have the expertise, I can do this again and again. Well, I say, yeah, do it again and again, then the story will be different because now what you're refurbishing and selling again now will be subject to income tax. Why? It's quite the same situation like in the case of a car dealer. I buy, I refurbish, sell. Buy, refurbish, sell. I sound like a car dealer. Now, you replace this example in the case of car with a property. I buy property, I refurbish, sell. Buy, refurbish, sell. Now I sound like a property dealer. So income tax naturally would apply to the investor as well. Something to take note of. It's very, very seriously. In fact, why would IRB want to do that? Why would IRB want to tax you under income tax and not RPGT? For very obvious reasons. If you notice from the tax rates, as far as tax rates are concerned, company tax rates and individual tax rates are company and income tax and RPGT rates, you can see the vast difference. Income tax is definitely higher. Similar with your individuals. Income tax can be as high as 26% for individuals, especially so after your chargeable income is 100,000 ringgit, which is very low, and RPGT is only 15% for the first 2 years. So you can see why the IRB would want to capture you on income tax and not RPGT. And this has, in fact, one of my students in KL has already conveyed this message to me that one of his friends, a property investor, was subject to income tax on the sale of the houses, the properties that he had. He sold 6 properties over a period of 2 years. All 6 properties were subject to income tax. So let the property flippers beware. This is something whereby can happen to them. But now, of course, the tricky part is this: the where is the gray line then? Where is the thin fine line between that separates income tax from RPGT? Actually, the court is also confused. RP is also confused. Everyone is confused. So this is what has been mentioned as far as case laws are concerned. Because the Act doesn't define what is capital and what's income. So as Lord Macmillan said in this particular landmark case, the Act doesn't define income any more than they define capital. Consequently, it is to the decided cases that one must go in search of the light. So, during the decided case laws, over time, the courts have established this principle called the badges of trade. Badges of trade. Badges of trade is a test to determine whereby a particular transaction that the person has entered into has the characteristics of a trade. So the more badges the particular transaction has, then the more likely it is trade in nature, hence income tax. Let me give you a few examples here of what some of the badges of trades are. The badges of trade, of course, there must be a profit-seeking motive, the nature of the property, whereby there's something readily and commonly tradable, subdivision or additional work, frequency of transactions. Let me put this in the context of the earlier example of my friend who refurbishes the cars. He has a profit-seeking motive. The nature of the property, cars, is easily tradable. There are car dealers around. People are trading cars. Subdivision or additional work, yes, that has been done because he did the job of refurbishing it so that he can make it more saleable at a higher value. Frequency of transactions, yes, he wants to do it over and over again. So his particular venture would have all these badges that I've stated. So if this is the case, if the various indicators of trade exist, yes, then it's income tax. Then again, I must mention here that these are some examples of the badges of trade, which is only 4 listed here. There's a list of about probably evolution over time after case laws is about 10 or 11. So I'm just highlighting 4. Property investors, you can see from what direction I'm getting. I'm getting at. You would have at least these same 4 badges of trade on those flippers. Wouldn't IRB want to tax you as a under trade, therefore income tax? Yes, they would. Okay, so we must find ways to shield ourselves from being subject to this sort of issues. So with proper planning, you can minimize your property sales exposure to income tax. Then again, it is minimizing. You cannot eliminate the badges totally, so there could be a good chance of us avoiding some badges and lessening the chances of it being subject to this income tax.